Hey, puppy trades. You can probably see the melancholy in my voice. It's a very sad day. I I think I might have lost my job. Oh man, I became an option trader and I became an expert in options at the best time and also the worst time. It's very sad. You see, there's two phenomenon going on, left and right, a tale of two cities, if you will. But I actually tried to write a book called The Death of an Option Salesman, based on Arthur Miller's Death of a Salesman. And I think I stopped writing that book because it I thought it was I thought it was a fiction book at first. I thought it was a fiction book. And then I realized it was a nonfiction book. You see, Death of a Salesman is basically about this guy as a salesman and the need to be a door to door salesman is just going away, right? We don't have door to door salesmen anymore, right? So the death of an option salesman was referring how not just one fund. I mean, this is not just one fund family. There's Pro Shares. There's so many, BlackRock, J.P. Morgan, so many. It's silly to even list them all. Zero DTE day trading option selling ETFs exist now. And so Death of an Option Salesman is a book that I'm still going to write. I'm still going to write it, but it's a nonfiction book. And what we're going to go over in this video is how this fund family, I mean, this might be the dagger. Because for a long time, the big complaint with Yield Max was that they do not actually own the underlying shares. One day, someone could wake up and the treasury bond market collapsed. And so if someone wanted that protection of owning Tesla common stock, having Tesla's assets in a way diversified far out of the treasury bond market, not entirely, right? But if someone wanted the assets, right? MicroStrategy actually owns Bitcoin, right? When I own MSTY, I don't actually own Bitcoin. Netflix, Nvidia, obvious why those assets, Facebook, would be important to own. Uh, Even if the treasury bonds, because no one wants a portfolio that's all treasury bonds. And so while these ETFs are capturing they're mimicking the performance of these ETFs of these underlying stocks, they're not actually holding the underlying stock until this ETF came along, and it has a lower expense ratio of 0.88. So this ETF is also going to be passively managed, but it's going to use a technical analysis strategy. And so what I'm basically getting at is FIVY. This is going to pick the 4 or 5 best performing. FIVY is going to pick the 5 best performing of the available Yield Max ETFs based on a technical analysis charting technique called point and figure. Now um, that is not Elliott Wave. but I have a lot of respect for point and figure. Anyway, I suspect that this ETF, FIVY, is going to do very well. It's going to pick the 5 best performing stocks of the Yield Max family, and it's going to hold the underlying shares, and it's going to hold the Yield Max funds, and it's going to pay a huge dividend the first week of every month. So the ETF total return, I suspect, is going to beat the S&P 500. I also suspect it's going to beat QQQ. And even if it doesn't, it's going to have an insanely high yield, possibly keeping up with them, but most likely outperforming. And I can just see the door closing, that they've kind of patched all their holes with MSTY and with Maro and Ybit. I can get a dividend from Bitcoin every week and hedge that dividend with a 25% SBIT position. I have a whole video about that. This FIVY looks like it's going to be my anchor for America. And I already know my anchor for outside of America. Just made a video about that. But this could be the American anchor ETF, where I own FIVY and I own FEAT, and then I can just scale that forever with the other ETFs that I own. And I'll still be doing Elliott Wave. I'll still need to know how to swing trade, but options trading, there's only one chance left. There's only one chance, one screen that can do it. I think this screen could be the one that keeps me as an option trader, where I am not just collecting it through ETFs, but I'm actually trading options directly. This could be the screen. So I've talked about Plug Power recently. This is another one that I'm going to use to test this screen. Canaan Creative was a big winner. So CAN was a big winner from this screen. QSI is on this screen, and I took a position in it today. So I actually didn't buy the 1.5 strike option. I bought the July 50-cent call for $100 a contract. So that's pretty deep in the money. And we're going to talk about the Elliott Wave. But just the important thing to know is that the vast majority of what I do is collect option premium. And even if I was interested in day trading, RDTE and XDTE and QDTE are going to day trade better than I will on a consistent basis. And they're definitely going to do it more efficiently. So I can see the end of me trading options directly. I'll still collect it through ETFs, but if this screen doesn't work, I really can't justify it. Because this is the vast majority, years of expertise, is that people mostly just lose money buying options. The only reason I can justify it, we'll go through later in this video, because do I have upside risk to Quantum Psi Inc? No. This is what I think is one of the best opportunities for me to make a good amount of money with options. And I've got this Elliott Wave set up, and I've got this option screen, and I'm going to try to hit a home run. Basically what I'm doing is Plug Power, Canaan Creative, now QSI, and I added one to a watch list. We're going to, as a channel, this is just documenting my trades. I'm going to see if this is going to work. And if it doesn't, I probably won't be trading options directly. I'm just going to collect it passively through ETFs. And that's, in a way, it's kind of sad. In a way, it's kind of sad. It's kind of like a truck driver being replaced by an autonomous vehicle, if that makes sense. I'll still be designing the best portfolio. I'll still be in finance, but I won't be an option trader anymore. It's going to be sad. The death of an options trader, unless QSI can be like CAN or like Imperial Petroleum from last year, but just from this screen. I think this screen could be the one. QSI is on it. It formed a wave 1, an A, B, C, wave 2, and then from this low, 1, 2, 3, 4, 5 waves up, wave 1, and then I believe an A, B, C correction, another wave 2. So I'm looking for wave 3 of wave 3 to begin. The length of wave 1 placed at the wave 2 low can take QSI up to 2.70 before a shallow wave 4 and a wave 5 higher. I bought an even number of contracts. So if wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, QSI can go all the way up to 400 before a shallow wave 4 and a wave 5 higher. So that's QSI. We'll see how I do. I bought the 50-cent strike option, strike call for July. And I'll document how I do. If QSI does really well, I'll probably sell half at 400, at 4, which will be 400 a contract at least, because QBTS and some of these other quantum stocks that I've hit out of the park, they have exploded way past these targets for wave 3 of wave 3. So I'm expecting QSI to play follow the leader to these other quantum stocks that have exploded recently. What is QSI? That's the Elliott wave. The company itself, it's trading at book value. It loses a good amount of money. It loses $95 million a year. So it could be an interest rate cut play. Quantum Incorporated Quantum Incorporated is a company pioneering next generation semiconductor chip-based proteomics. Quantum Sci Incorporated, formerly known as High Cape Capital, is based in New York. 39% institutional shareholders, 30% insider shareholders. I like when that number, those two numbers combined, is close to 70. Notice the interest coverage ratio of negative 1.15. I liked seeing that was much higher than D-Wave Quantum's interest rate coverage ratio, but this is a very unprofitable company. So what's maybe a better example of why I would be able to justify buying options even if this long call screen didn't work? The last one would be Imperial Petroleum. It exposes me to oil, which I'm directly exposed to. So when oil stays down, I make money indirectly. Gold is similar, but real estate and oil, when they stay down, I directly make money. So I invest in real estate, but options on small cap oil stocks like Imperial Petroleum give me exposure to oil. And I can use a small amount of money. It would make more sense if I drove every day to a job. But anyway, IMPP forms 1, 2, 3, 4, 5 waves up, ending a large wave 1. This is an A, B, C correction for a large wave 2. And I'm looking for wave 3 of wave 3 to begin. IMPP has also been seen on the screen That was seen in the plug power video, and I've seen it again as well. So we'll see if IMPP can be like CAN, and possibly this screen will see wave 1, wave 2, powerful wave 3 above 2.35. That is a target of 6.20 before a shallow wave 4 that retests the wave 1 high, and a wave 5 that's the length of wave 1 placed at the wave 4 low. IMPP can head all the way up to 8.